Hi everyone, welcome back to another Grand Union Finance Market Update with myself, Sam and Shanelle.
Hey guys.
Today we've got three things in particular that we're going to talk about. First of all, the autumn statement, which obviously happened last week before.
Yes.
We're going to talk a little bit about predictions on base rate, interest rates and things like that. And then we're also going to finish off talking about the Leasehold and Freehold Reform Act or Reform Bill that's got into Parliament recently. It was announced in the King's speech. So let's kick off, talk about the autumn statement.
Yes.
So two things in particular on there, one negative, one positive. Let's start with the negative.
Yeah.
We were anticipating that maybe there might be something that was talked about in terms of bringing back Help to Buy.
Yeah.
But there was nothing. It was conspicuous in its absence.
Mm-hmm.
That would have really sort of helped, I think, push the market a little bit more, giving first-time buyers a little bit more hope that there was something in there. I mean, obviously we don't deal with a lot of mortgages for first-time buyers, but you know, in terms of from a developer point of view, do you think that is a real negative for developers? Do you reckon they're going to be frustrated by that?
Well, yeah, I think it gets rid of a big part of their markets, doesn't it? Really, as a developer trying to sell properties to anyone, a first-time buyer. I mean, I was a first-time buyer and I bought a new build home just because of the help that was available. I mean, people my age, I'm constantly seeing people moaning about they can't afford to get on the property ladder, and schemes like this are so helpful just to help people, even like single people as well. Like it's really difficult out there, and if you're a single person with one income looking to buy a property with an average, I think average house prices now are 266 grand now. So, you know, if you work back from that, you've got to put 26 grand deposit down, that's your 10%, and then the remaining amount, you've got to divide the loan amount between 4.5 roughly, isn't it? And then the salary, I can't even do the quick maths on that, but the salary on that needs to be, you need to have a salary of above average there to be able to do that. So it really has sort of got rid of a big chunk of the market really, because if you're gonna have, it's a cycle, isn't it, in the property market. You're going to have people who are in their 20s to 30s, they're going to want to try and get on the property ladder, and then, you know, 30s to 60, I guess, you're in your prime, working full, you've got your career going, and you're raising a family, so maybe you upsize, and then you come to the end of the cycle then, and you downsize, and that's the way the cycle works. And so if you're not able to get those people buying houses, it can cause, you know, issues further down the line, can't it?
And of course, I've seen that has had a knock-on effect on the rental market, because a lot of people think that the rental market is massive when it actually isn't. There is, you know, I think it's less than 20% of property in the UK is owned by a private landlord in some way, shape, or form. So you think about the number of people that rely on that market, it's very, very small. And if you've got less and less people able to afford to buy their own home, that is going to start having a knock-on effect, and we've seen rents go up. So obviously that's, I suppose, a little bit of a negative. But I suppose on the flip side of that, we did get the announcement that they were looking to change permit development rights to help us create more supply of property. So as much as we didn't get any good announcements that we might have some help for people that want to get on the ladder, increasing the supply and increasing the supply at the lower end might also have a positive effect. So it was announced that the PD rights would be changed to allow for a single unit home, so a house of some description, to be converted into 2 flats without the need for full planning permission. I think this is pretty big news. How big is it? How much of an effect do you think it's going to have on what developers do next year?
It's had mixed reviews, I think. So developers have gone whoopie-doo type thing. It'll only work in certain areas, which is true, because the cost of converting a property into 2 can be quite expensive, especially when, you know, the price of costs have gone up for the developer. It needs to be worth their while to be able to do. But going back to that example that I just made of one single unit being worth 266 grand, well, you split that in half, suddenly you've got 2 flats now worth, you know, 150, 160 that maybe someone can afford to buy now. So yeah, straight away it's just solving small issues like that, isn't it? But yeah, I think it's a good thing, but ultimately I think the changes in permitted development sort of coincide with changes that we like to see in planning, you know, planning reforms and things like that. I saw on the statement something to do with that they are going to try and push more funding and stuff into planning to try and not increase the amount of applications they can take on, but essentially, yeah, it is. They can deal with more, and that they're going to put sort of like strict timelines towards getting your planning submitted and approved within a certain time frame. And if you don't, they're offering refunds for that.
Yeah.
So yeah, it's like that in any job, isn't it? It's trying to create incentives or some sort of guideline or end dates for the planning team to be like, get us our response ASAP.
Exactly.
It's like we do it. Well, developers do it with their builders. They say, well, we're going to pay you X amount every single month, and we want the job done at this date. So it's like, I guess it's like how long is a piece of string with the planning department, isn't it? But yeah, permitted development reforms are like a gold mine, isn't it, for property investors, because you can just crack on and do things without needing to wait months and months and months for planning.
I think you're right in what you were saying, specifically on the geography, because I do think when you look at the cost that's involved in a renovation or development of that kind of level, the changes in the cost are not going to be in line with the changes of the value of the properties.
Yeah.
When we look at, say, comparing a property in London to a property in Leeds, something like that, the cost will be less in Leeds, I think, but it won't be substantially less in Leeds. So I think the opportunities for this development change is more at the sort of above average price, and the price points where flats are going to fly off the shelves. So certain areas of London, I mean, I could already see, there's already areas in London that, have Article 4, so permitted development rights are harder to come by.
Yeah.
But I think there's going to be a flurry of different areas in the southeast in particular that are going to be pushing for Article 4 to be imposed, so that effectively this new permitted development right gets thrown out the window. So I think we've got a window of opportunity where it's looking in certain areas where turning a house into a flat is going to make complete and perfect sense to do that. So I think like I said, we've got this window of opportunity. It hasn't been brought in yet. It's not official. It's not there. But realistically, it's already being discussed. It's been spoken about in the autumn. It's announced it's going to be happening. Yeah. So expect it to be made law, if you like. I think within the next few months. What you were saying in terms of the planning as well, massive. That they're effectively bringing in, like it's what you were saying about the cost. It's like a tiered system. It's almost like you can pay to be on the fast track, and then if it doesn't happen within a certain period of time, then there is a deadline for when that's going to happen. So I think in the short term that sounds like a great idea, but the reality is that just meaning that the same problems that we're having in planning in general are just going to be shifted on a bit. So it's basically the norm will then be that you have to pay more to get your planning application in, because everyone's going to have to go down that route, because not doing it means you're going to be waiting years and years and years. Yeah. That, to be honest, the proof's going to be in the pudding with that one. Exactly. There could be pros, there could be cons.
Because I don't have the inside scoop. I have no idea what causes such delays with the council. Is it that they don't have the staff in? Do they not have the technology? Because I think that's an issue that we've got in the housing market as a whole, isn't it? Is that there's such a lack of technology to push things forward, and we're sort of still dealing with transactions the same way as we did like 100 years ago, with signing things with a wet signature and sending it in the post and all that stuff that sort of makes it clunky. So
that's it. I mean, to be honest, that's an issue across any sort of public sector work. Is where are the incentives? People talk a lot about how the people that run the banks get paid too much money and all this kind of stuff. The reality is that if you're not incentivised, the NHS is a great example of this. If you're not incentivised financially, there's only goodwill only goes so far. People that are sitting in those planning offices, if they say, right, your job is that you need to get it done at a certain time, well, what's my incentive to do that? If there's only so much that it's just your job to do it, well, actually, I'm going to get paid whether it hits that deadline or not, so really, do I care?
That's it. Sounds like a solicitor.
Yeah. We love solicitors.
We love you guys.
We love solicitors. But cool, so obviously lots happening there in the autumn statement. Coming on to the base rate then, and interest rates in general, we're literally just hot on the heels within, we're recording this on, what's the date today, the 12th the 6th.
The 6th to the 12th.
The 6th to the 12th, there we go. So 6th of December, literally within the last 24 hours, Andrew Bailey, Governor of the Bank of England's come out. And I mean, there's almost like no point us even having the Monetary Policy Committee meeting next week or week after, because he's effectively just said it's not changing anytime soon.
It's all being said. It's all.
So you know, the base rate is where it is. It's there to stay. We got some good news last month that inflation had come down. The reality is that was maybe a little bit of a you know, it wasn't a true reflection of it, just because year on year we had some energy changes, you know, last year at the same time, which has then influenced this. But the reality is inflation is still too high, and the base rate is the main, you know, arsenal, the main tool that we've got to fight it. And as a result, you know, I think the base rate will probably stay as it is, at least until we get a much more better handle on inflation. So with that in mind, you know, people will probably sit there watching this going, oh great, doom and gloom, maybe May, maybe June next year we might see a decrease in the Bank of England base rate. It remains to be seen. So what does that mean for mortgage rates? But we've seen recently that actually there are quite a few lenders that are lending money that is at a lower rate than the Bank of England base rate. So obviously that's been great for us, because it's nice to finally be able to make recommendations for mortgage rates that start with 3 to our clients again. But you know, it's tricky. We need to understand the mechanism behind it, the fact that it isn't just all about the base rate. You know, there are other things, and of course we have to talk about fees as well. Because what a lot of people are just seeing is that headline rate. They're not seeing, you know, what else is part of that, and it's important to understand that when you are choosing, you know, what mortgage product you're going to go with. So fee, I can't think of the biggest fee I think I've seen is 9.99%.
It was, West One, wasn't it?
Yeah.
That was savage. But like, that's the thing, when you're quite short-sighted and you're looking at the initial transaction that you're dealing with, whether it's a remortgage or a purchase, you just want to get your money back out of the deal. So you're seeing the headline rates, and wicked, that's bringing your monthly payments down. But some people aren't looking at the bigger picture, the long-term sort of goal, really, because property is a long-term thing. And, you know, adding a 7% fee onto your 75% mortgage is taking you to 82% loan to value. I think I did a video on it this week. But it's like, if you're a portfolio landlord, you're not just being viewed on that initial transaction anymore. You're going to be viewed as a whole, with your whole portfolio being assessed as well. So if your portfolio is sat at 75%, literally the max, and you add an 82% loan to value property to it, that's going to take your average up. It only takes it up to 1%, I think it is, or something like that. But then straight away, it rings alarm bells to lenders, because suddenly now your whole portfolio is over what they're comfortable with lending. So I think a lot of people have been quick to accept the lowest rates and not actually thought about what impact that's going to do. Even if you're not a portfolio landlord, what impact is that going to have on you in 2 years' time when you've got your fourth property and all of a sudden you're over leveraged?
It's exactly. I mean, I don't know. I've seen. I mean, bearing in mind, obviously, we're in the industry. We're talking about mortgage rates and stuff like that all the time. It's been quite fun, actually, over the last couple of weeks to watch a lot of investors and people like that suddenly talking about this. What was the news was Lendinvest, released their 3.99% rate. What was really weird actually was no one actually saw that State Bank of India had.
Bank of India, they did.
They had a 3.9%, not even 3.99% rate that had been released like 2 weeks previous. Okay, that was for personally owned properties, not limited company, so it was still big. The amount of people that jumped on it and they were talking about how great it was and that, and actually, we know as brokers, when we're looking at this, exactly what you said, you've got to look at the bigger picture. They were just looking at this headline, they were saying how amazing it is and all that sort of stuff. They weren't actually giving the right advice. I know that they're not qualified to do so, but you're absolutely spot on in that it's more than just that. And actually, I think a lot of what else was being talked about was, well, is this then the turning point? Are we going to start seeing all the other lenders jump on the bandwagon? And the reality is they haven't. And that is really because, and I've been talking about this really for the last month or so, which is that when you get into the final quarter of the year, you've got two types of lenders.
Yeah.
Ones that have been doing really well all year and they've lent all their money and they've reached the target that they've set for the year, so they're now in the mode of resetting for 2024.
Christmas pies.
For Christmas pies.
And bonuses.
And bonuses, yeah. And then you've got the ones that haven't hit their lending targets.
Yeah.
And what do you do? You know, if you've got a load of product to sell, like when I used to work on the deli counter at Waitrose, when everything was going out of date, what did I do? I halved the price to try and get it out as quickly as I possibly could. And that's what LendInvest have probably done, is we know that LendInvest have not been massively active this year.
Yeah.
In fact, for large proportions of the year, they've been in the kind of the interest rate wilderness, if you like, because they haven't been pricing very well.
Yeah.
So it doesn't surprise me that they are well behind probably on what their anticipated figures are. Like, look, we haven't seen those figures, so we're just speculating here. But one of the reasons is probably that they're going, we've got a good opportunity here. Last couple of months of the year, let's just get as much money out the door as we possibly can. And maybe we'll hit that target. Maybe we'll get our bonus.
Yeah,
you know?
I think they've probably gone on the side of caution, haven't they, all year? The uncertainty now. There's, like you said, the news that we've had that the base rate is likely to stay the same. That sort of gives us even more sort of comfort than we have had the last couple of months, even though it has been pretty comfortable. But yeah, straight away it's like, boom, let's get our money out then, because we're pretty certain that for the next couple of months it's going to be quite stable.
Exactly, and you know we've seen there are other lenders that reduce rates. You know, that's not diminish that, but you know we are still talking averages being high fours, early fives. And to be honest with you, if the average rate of a mortgage over the next 12 months became between 4 and 4.5%, I think that's really manageable. I think that creates will help create a more stable property market. Yes, I'm sure at some point when the economy improves, we will suddenly start seeing house price rises again. But for the time being, having a relatively stable market is probably just will be a nice period of consolidation, really.
Yeah.
It's obviously it's not just down to the base rate that pushes certain interest rates to be released. It is down to how much it costs lenders to borrow money to lend out, and we use SONIA rates, swap rates for that, which are much more. They fluctuate more when we're in a period of economic instability.
Yeah.
They fluctuate less when things are more stable. We are seeing that things are becoming a little bit more stable, therefore those fluctuations are less, which means that we can predict the cost of that money better, which means that lenders can afford to reduce their rates in accordance to that. So that has been a bit of the knock-on effect, and I think we've kind of reached that point now. So until the base rate does come down, I don't think we're going to see any more huge milestones really over the next couple of months. So we've had a couple of clients, haven't we, recently, both of us, that have said, oh, maybe I'll wait till the new year to refinance. Well, the reality is I can't see there being too much of a difference. Moving into the new year to where it is now. Especially if people are thinking about remortgaging, and because they're thinking, February, March next year, I reach the end of my fixed rate, I need to start planning for that. The reality is, with Christmas involved, we should be looking at starting that application process now. And if we do go with a lender that does reduce their rates, most of the time they're okay with us switching over the products, aren't they?
Yeah, and that's it. Having lenders that are flexible is key, really. Changing the product a lot of the time is free of charge, and we can just ask them to amend the offer if your offer is already out, or before offer. You pretty much can change it before that happens. So plenty of opportunity to get something in before the new year.
Absolutely.
And before everyone shuts
So if
up.
you need to refinance, guys, there's a link down in the description. Make sure you click on it, get in touch with us, we can organise a call, we can go through everything that you need to make sure that we don't miss out on at the end of your fixed rate and you fall onto that dreaded standard variable rate. So make sure you get in touch with us and we'll help you sort that out.
Yeah.
Last thing to discuss is the potential, or the much talked about leasehold and freehold reform bill, not act yet, bill. Announced in the King's speech, which is a bit of a random place for it to be announced. I'm sure the King doesn't probably care too much about it. But a few changes, and this was actually now formally been addressed in Parliament as of the 27th of December. Michael Gove brought this as an official thing to be discussed, a bill to be discussed, which to me suggests, because I think when it was when it was first like announced in the King's speech, there's a lot of people that were like, well, when is this actually going to come in? The fact that on the 27th it's already, you know, being talked about in Parliament suggests to me that this is something they probably want to start pushing through sooner rather than later. So we quickly go through the points.
Yeah.
I have written them down so I don't forget.
Yeah.
But the big one is this ban of leasehold houses, basically.
Yeah.
So effectively what that means is that any new build property, any house that's built from now on, there are existing leasehold houses, but any houses built from now on will not, under this bill, would not be allowed to be leasehold. They would have to be freehold, which for us from a lending point of view helps because, you know, there are a lot of lenders out there that don't like their leasehold houses, aren't there?
Yeah. It's funny, you know, because I was just saying earlier that I bought a new build flat, and we've got like a community, and everyone moans about the management company. Like, for me, it's annoying anyway, but you just got to deal with it because you're in a flat. But I would hate it if I had a house that was leasehold and being dictated and billed every year. It's crazy the amount they're being billed as well, just for nothing really. So yeah, it's definitely going to help, and I think if you're using, as a property investor, if you're using a strategy such as extending leases as your main strategy, where you're buying houses that have got low leases at the moment, getting them extended, there's been a change in that as well, hasn't there?
Yeah, so that was another big one, which is the standard at the moment to extend, so when you approach a freeholder to extend your lease, the standard is to extend it by 90 years. That under the reform bill would be changed to 990 years.
Yeah.
So I feel kind of sorry for like leasehold solicitors and surveyors, and like their whole thing is to price up these things. So they're going to get a load of business over the next couple of years, and then it should fall quite flat.
Yeah.
Once all the properties have had their lease extended to 990 years, but that's really, really useful because it just gives, you know, it gives people that extra security of, you know, if you've got a 990-year lease, it's pretty secure, you know, and I think that's massively important. So it does represent a good opportunity. And I guess this couples in with two other parts that were announced, which is that if you do extend your lease, then effectively they're removing ground rent post lease extension. So you're on that 990-year lease. Effectively, you're buying the ground a little bit as well in terms of that, because it's so long, and they're saying that the freeholder will no longer be able to charge you ground rent, which I know that compared to service charges, that's usually the smaller of the cost, but it's a cost nonetheless. So that's obviously a massive positive. And of course, the ability to increase that or extend that lease has just become that little bit easier as well, because we had the Section 42, I always get it wrong, I think it's Section 42, which would mean that a leaseholder could apply and agree to extend the lease, you know, to that, you know, statutory sort of 90 years previously, 990 under the new reform, and then they could reassign that to someone they were selling the flat to coincide with completion. So they agree the extension, somebody buys the flat, the leasehold flat, and then they can reassign it to them on completion and extend on completion. If you didn't do that, you had to wait 2 years. That is going to be, you know, shredded. If the reform bill does come in, they're going to stop doing that. You don't have to wait 2 years. There's no mandatory wait period afterwards. So effectively, that Section 42 is gone, and it just means that for clients of ours that are, you know, do extend leases as part of their strategy, there's going to be so many more opportunities because they can just go in and buy a leasehold flat that has a low lease, and they don't have to be thinking about, okay, well, really to make good on this investment, to increase the value, I'm going to have to find flats that do already have that agreement in place that can be reassigned to me on completion. They can go to any flat that has a low lease, and they can put an offer in, and then they can just start that process directly with the freeholder themselves after it's and you know, the freeholder can't really say no. It's just about finding the price. And there's also, you know, these are a couple of the little minor things as well on the back of this, which is that, you know, the pricing structure of that should be sort of more sort of capped. They've not released a lot of information about that as to how that's going to look, but it should just create a much fairer pricing structure, which obviously is going to help massively.
Yeah, definitely. I've got a case at the moment that's really delayed because of this whole Section 42. It's having it handed over is taking ages, and you know, when the client wants to complete quickly and usually bridging finance, it's not ideal, is it? So yeah, so long.
Yeah, absolutely. And the other thing that was you mentioned in there as well about like management fees and all that kind of stuff.
Yeah.
Again, transparency over that I think is massively important. I mean, again, my first home I ever bought was a leasehold flat as well, and had the same thing. I remember the meetings in the pub down the road about us not being happy with the management company, all that.
Yeah.
There's going to be a bit more power, a bit more transparency on the costs. So particularly one of the things that was mentioned about was insurance. Being able to, the freeholders or the management company wouldn't just be able to go and use an insurance company that would pay them like commissions and all that kind of stuff. There'd be a lot more transparency over that. So I think the whole thing, on the whole, is massively positive.
Yeah.
We as a company, as a country, having leasehold is a relatively strange, unique thing. It's a British thing. A lot of other countries do not have leasehold. Everything is freehold. So I think we're moving towards very slowly to conforming with other countries in terms of our housing. And it's just less confusing.
Yeah.
If there was just freehold, it just makes it a hell of a lot less confusing. And I think this is a really positive step. Like anything, we were talking earlier about permitted development rights and opportunities and all that kind of stuff.
Yeah.
This again represents an opportunity. Whilst when you're ahead of the game, when you know about this stuff before it becomes mass market, we know about all this stuff because we're reading about it. We get sent it in newsletters and all this kind of stuff. But man on the street, lady on the street, they're not going to know this sort of stuff and where the opportunities are. A lot of vendors that are selling won't know about these changes. Even agents might not know about some of these changes. So it represents a huge opportunity to get ahead of the curve as an investor, to acquire more properties in a more creative way, being able to look at a deal and go, actually, this now stacks up because I can take advantage of this new leasehold reform bill or the PD right changes and all that sort of stuff.
And it's understanding, the amount of conversations that I have with clients about understanding how to use finance as a tool to implement these types of strategies. Like, I don't think people understand that you can bridge against the uplifted value of that property once you've extended the lease, and you can extend the lease between exchange and completion. So you're completing on a property that's already gone up in value by extending the lease.
Yeah.
And using bridging finance to do that is huge. I've seen clients do it with literally no deposit because the uplift that the lease, just extending the lease has done to the property before they've even got the keys has just made their money back. Like, it's crazy. And
again, this is because we're in this world. We understand when we see it day to day, all these case studies, all these creative ways of financing things. I say all the time, if an investor can have even a slightly higher understanding of different financial products, different finance products, how they work. Even within the sphere of bridging, there are so many different mini product sectors. Just understanding how all these works, working with a good broker, cough cough. Actually, just it's such a game changer. It puts you ahead of the curve. I've often gone on record, and sometimes I get a bit of backlash, is to say that a lot of these property education companies, one of the things they fall down on is the financial education.
100%.
Whereas I think that's actually one of the most important aspects of it, because understanding how to finance a deal and how you can be creative in doing that it can be one of the biggest ways of propelling yourself forward. And unfortunately, I actually watched a video recently about bridging finance by somebody who is actually very well known for being the owner of a property education company, and he went through a deal and talked about bridging finance, and the numbers didn't work. As I was watching it, I was going, this doesn't make any sense. And I actually went and looked at the comments, and all the comments said exactly the same thing. So I'm thinking, this person is educating a load of people about this, and if he's giving the wrong information, then that's not good. So one of the best things you can do is obviously subscribe to this channel, and you'll learn a lot about different finance products and how you can use those to structure different kind of strategies and different types of deals. But really educating yourself, working with a broker that really understands it, I think is imperative. And like you say, with so many opportunities over the next 12 months, 24 months, getting ahead of the curve, understand things better than the normal Joe blogs, and there are going to be so many opportunities.
100%. There's been plenty of times where I've had conversations with clients and I've gone, why didn't you try this way? And why don't you negotiate with the vendor to try and get an exchange delayed completion, and we can fund it this way? And it's like, what?
It's when you say something like, oh, you can do an exchange with delayed completion, and they don't know what that is.
Yeah.
And you're like, hang on a second, are we brokers or are we property educators?
Yeah.
But it's part and parcel of what we do. I think what we like to do to set ourselves apart as a brokerage at Grand Union Finance is that we do understand how to structure different deals, not just from a financial point of view, but because we're so lucky to work with so many amazing investors. Funnily enough, we see what the good ones are doing,
exactly,
and we work with them to make those purchases work, those developments work, those projects work. And we can impart that knowledge onto to some of the other clients we work with that are maybe a bit earlier on in their careers in property. And that's actually, for me, I don't know how you feel about it, but it's one of the best parts of my job. Being able to talk to clients and not just be sitting there like on a calculator or going through boring figures. It's actually talking about creative structures and strategies and where do they want to be in 15 years time and how can we help get them there. That's for me, that's the best part of the job.
100%. It literally, like you just said, it's either starting with the brand new investors and helping them through their journey to reach their goals, whatever that may be, but also working with the clients that are further on in their journey and maybe just taking little bits and bobs from what they're saying and helping the ones that are earlier on. And it's definitely the best part of the job for sure.
Yeah, and if you want to be one of those clients that can get benefit from the knowledge that Shanelle and I have, do get in touch. As I mentioned before, there's a link down in the description below to come through to our contact page where you can request a call from one of the brokers here at Grand Union Finance. There's actually a link below specifically to speak to Shanelle when it comes to bridging. She's a bit of a ninja when it comes to bridging finance, so you could book a call directly with Shanelle to talk about all your bridging needs. We'll be back next month for another one. We're off to start our Christmas shopping now.
Yes.
But we'll be back in January to hopefully brighten everyone's moods up with some positive stuff going into 2024. But I guess for now, thanks for joining us. Thanks, Shanelle, for coming in.
Thank you.
And we'll see you on the next one.